break. We have a whole host of queries to get to, and we have some guests joining us to take you through that. But first up, a quick look at the markets. We're currently holding above the 18,000 mark, but it's 18,015 on the Nifty. So a bunch of the recovery that we've seen has been given up. We went all the way up to 18,100 almost, and from there it has been quite a slide. So that's what's happening with the Nifty. A lot of this trend today, though, is coming through from the banks, which are up 0.4%. So keep your eye out on some of the larger ones. We'll get back to the market action in just a bit. But first up, let me invite our guests on the show. We have Ruchit Jain, who's lead research at 5paisa.com, as well as Mayuresh Joshi, head of equity research at William O'Neill, who join us. Ruchit, as well as Mayuresh, thanks a lot for joining us today. We have a lot of queries which have come in, so I'm going to get straight to it and, have you sort of advise our viewers. We have Nitish Gandhi, who writes to us from Chennai. He says he holds 25 shares of HCL Tech at 1,200 rupees. He also has 20 shares of Sun Pharma at 1,000 rupees, and he's making profits in his investment. So let me come to you and ask you what you think about both of these. Mayuresh, if I can come to you first on HCL Tech. I mean, of course, in the past month or so, we've seen a good rally in, some of the tech names. Even HCL Tech is up around 12% for the month. How would you look at this one? Do you think there's, room for further upside here? And of course, Sun Pharma, we've been talking about non-stop on the channel. It's seen quite a rally.
Oh, absolutely. Afternoon, Pavitra. No, both the stocks, specifically HCL Tech, came out with a very good set of numbers. I think if you probably stack up the IT companies and the top tier ones, HCL Tech followed by Infosys and TCS probably had the best numbers in that stack. On HCL Tech, I think the revenue beat as well as the margins that they reported have been quite significant at this point of time. Now, the expectations largely, specifically on the EBIT margin front, were close to 17.5%, the reported margins of 18%. Having said that, the guidance which has now come down for HCL Tech, I think that is something which has probably just spooked the street in general. And what probably happens in terms of the recessionary fears in the US, probably clawback of orders happening from Q4 onwards. Margin pressures because of attrition still continue, and added costs coming through in terms of more outsourcing expenses, travel-level trade expenses, so on and so forth. So I think the cut in the margin guidance on the top end from 18 to 20, 2019, that probably just spooked the street a tad bit going forward. But largely, I think margin should sustain. Deal wins have been very, very good so far. They're sitting on a very healthy order book. And therefore, I think as per the O'Neill methodology, HCL Tech is trading above all its moving averages at this point in time. So I think there is some pain for the sector as a whole. The weakness and the underperformance might continue, but if the investor has a longer-term view, he can very well hold on to the stock. When it comes to Sun Pharma, I think Sun Pharma along with Cipla have been clear outperformance when it comes to the pharma space. Again, I think the pipeline that Sun has, Pavitra, specifically in terms of the expected products in the specialty portfolio, Ilumya, Sequoia as an example, that will drive the US specialty sales to more than $1 billion in the next 2 to 3 years. The Indian business is performing well, and you probably need to look at these numbers ex-COVID as well. And therefore, I think the US market with the specialty sales, expectations in terms of the India business expected to do well, and the rest of the world expected to continue its good show. I think the numbers should probably come out both in terms of margins, which should get sustained in spite of elevated R&D costs, and the expectations of FDA approvals or resolutions, if any, for the next few figures, causing tailwinds to the stock as well. So it's trading above the key pivot levels with a good RS strength. EPS strength needs to probably improve on the O'Neill methodology, but somebody holding this can hold on.
All right, you can hold on to that. I'm going to have to take a short, break from the queries because HDFC's numbers are breaking on the exchange's net profit at around 4,400. This is versus the poll that we had of 4,000. So there has been a beat on that one. I'm waiting for more. So revenue has come in at just about 15,000 crores. This is versus 12,200 crores that we saw last year. So there's quite an increase on that front as well. These are the numbers that we have for now. I'm going to try to bring you some more details. Remember that we did expect quite a good AUM growth as well. That's what the sort of preview was throwing up. So let me see if I can get those figures. For now, what we're working with is the net profit where there has been a beat. It's around 500 crores above what was, estimated in the poll. And the revenue has come in significantly above what we saw last year. You can see the stock also is moving up. It's taking taken a sharp spike as soon as the results are out. It's actually moved into the green as well right now. That is HDFC. And I'm going to try and get you some more details. We should get a we should get a reaction in as well. The net interest income has come in 4,600 crores on the net interest income. So that one also looks quite good. And, like I was pointing out, the stock continues to gain actually right now. So I'm sure we are waiting by for more details on the asset quality, on slippages. Those are numbers that we're watching out for. But even on the net interest income, you can see that there's been a significant beat. It's coming at around 4,600 crores. This is versus around 4,500 crores that we were working with. So on all the parameters that we have so far, whether it is the net profit, the net interest income, and even on the revenue, there seems to be quite a beat on this stock. And it was expected to be a good quarter as well for HDFC. So let's see what else we can pick up in, for these stocks. In fact, let me toss it to Mayuresh. And Mayuresh, do you track this stock as well?
Well, absolutely, Pavitra. I think a very stable set of numbers because I think the large expectations in terms of the top line growth are probably there at the right time. Again, I think what probably happens in terms of the merger, I think that is what the street is more interested in. Because I think net asset quality pressures, obviously HDFC is impeccable on those numbers. But I think what happens with that and the commentary related to that is something that the street will look out.
All right, that is on HDFC, looking like quite a good set, like Mayuresh was also pointing out. Richard doing as well as ICICI Bank, he can hold for the long term, 7 to 10 years is what he's looking at. So take us through your call on both of these. And within the banking space, is there a better way to play it? Of course, these have been some of the favorites, especially ICICI Bank, right?
Oh, absolutely, Pavitra. No two ways about it. Yeah. I think numbers were stupendous. I think if you probably look at all numbers that the top tier banks have posted have been very, very good. For Axis in general, I think the beat was across operating metrics as well. I think NIMs at 3.96, almost 4%. Solid NII growth. The credit growth specifically is expected to continue for the sector as a whole and for the banks, specifically the large banks in general. If you probably look at the stress pool as well, for all banks and for Axis Bank in particular, I think the stress pool, which probably is the combination of net NPAs plus restructured, plus the BB and below portfolio, that has come down to an all-time low of 1.89%. So therefore, I think with retail expected to grow extremely well over the next few quarters, NIMs expected to get maintained around this mark. And with excessive provisioning done on the balance sheet, I think the adjustments that were needed or the expectations on ROAs of almost 2%, almost achieved that at 1.8% with ROEs at 18.5%. So the Citibank acquisition might be a little bit dilutive from a near-term perspective, but overall, I think the numbers are looking extremely good. So I think there is no two ways in terms of holding Axis Bank as well. For ICICI, I think the kind of loan growth that came through quarter on quarter, I think, because that was very, very pertinent in my opinion. 6%, both in terms of advances and deposits growth. The net NPAs, if I'm not mistaken, came down to 0.6% from 0.7%. The provisioning as on the balance sheet, as Axis also has accelerated that. ICICI Bank has almost got 80% in terms of provisioning as well, with Tier 1 staying at almost 17%. So I think solidly placed in terms of capital needed to excessively grow in the next few quarters. Asset quality pressures coming up. To add more, as per the O'Neill methodology, Pavitra, I think 936 is a key pivot for ICICI Bank. So if it crosses that pivot of 936 as per our methodology, the investor can probably go on and add more to the ICICI Bank stock.
All right, so very positive on both of these stocks. Mayuresh, you heard, he is willing to hold on for a long time. He said he can look at even 5 years. Do you think with that time horizon in mind, this could be an okay bet?
No, so again, I think we have to differentiate in terms of leaders and Laggards as well. So our methodology is very, very clear in terms of focusing on leaders. So I think, Mr. Suresh, you probably need to just swallow the bitter pill here. Maybe the stock can do well going forward, but I think if you probably want compounded growth with stability in terms of staying with a leader, which can probably survive market cycle phases as well, look out for leadership stocks in the banking space, as we have discussed. Look out for leadership stocks, as an example, like an L&T within the capital goods space. Government is going to spend exponentially in the next few quarters. So I think capital goods, domestic cyclicals need support of banks, and the larger banks are probably very well placed to do that. So I think if you probably have the right vision in terms of what the government wants for the next 4 to 5 years, the capital goods stroke private banks should do exceedingly well. So focus on leaders within the spaces if you have a 4 to 5 years.
All right, got that. So that is a unanimous view on Alok Industries that perhaps best to get out of this one. Ruchit, Mayuresh, thanks a lot for joining us on the show. We'll have to leave it at that. It was a short one today because of HDFC's earnings, but thanks.